A bit of a firmer tone across risk assets as we go into the final trading session, not just of September, but of the third quarter as well. Want to know more? Keep watching. Hello, I'm David and this is Trading Today. Yes, it really has been a pretty dismal month for September. A lot of people banging on about it, so I'll just join them. As far as the major US indices are concerned, we've seen the Dow on course for closing down around 3% September, S&P down about 4.6%, and the Nasdaq leading both down about 6%. Of course, we saw a higher than expected CPI figure mid-month, which really spurred the sell-off, and then we had quite a hawkish sounding FOMC, despite the fact that the Fed didn't raise rates. That was expected. Nevertheless, the prospect of fewer rate cuts than expected in 2024 was enough to send investors scurrying to the sidelines and selling off equities. Nevertheless, we have seen a bit of a bounce over the past few days after hitting a low on the S&P of around 4240. We are now comfortably above 4300, and we got a little perk higher just after we got the latest inflation data. This is core PCE. This is known as the Fed's preferred inflation measure, and it's actually the one that they used as a target, as the measure to getting to their 2% inflation target. Just a bit of a recap on there. If we look at core PCE, that excludes food and energy. It's the headline, and it's year on year. We came in at plus 3.9%. That was as expected, but it was down from plus 4.2% last month. We also had some good news for Eurozone inflation. CPI over there coming down quite nicely as well. We saw headline CPI come in plus 4.3%. Last time it was plus 5.2%. And we saw the core figure coming at plus 4.5%, down from 5.3%. So that's good news. In fact, we actually saw the euro bounce on that, but I think that's more of a dollar-related move, with the dollar coming off over the last couple of days after a really tremendous rally over the last few months, coming a little bit of the froth coming off that. As I say, it's been better for risk assets today. We are seeing bounces in precious metals, which we haven't seen for a while, and as I say, we got the indices a little bit higher as well as we go ahead of the open. We have got about 3/4 of an hour to go until the opening of the US stock exchanges. Nevertheless, all positive so far. I should mention Nike up 9% pre-market trading on the back of better than expected profit figures, although margins are compressed somewhat because of rising production costs. Thank you very much indeed for watching. I hope you found this of interest. If you did, please like and follow, and best of luck with your trading. Goodbye.